Year to date, the NGX has appreciated 1.76%, but this is not how analysts saw the year going. At the beginning, it was projected that there will be a flurry of new listings, but what we've seen is a few delistings with one listing. Our banks have raised capital from the market, but there's still over 2 trillion naira to be raised from the market. Newly created shares have been listed. Market cap is around 65.8 trillion. That's as of yesterday. But we are very far off from 100 trillion naira market capitalization. And on top of our agenda today, the question is the NGX so far so good. How far are we from what we want? This is Economy and Market, where we give you a comprehensive breakdown of the market and economic activities in Nigeria. I am your host, David Olujimi. This week, listed beer makers, Nigerian breweries, international breweries have been on a bullish roll, especially after Nigerian breweries posted its first positive quarter since Q1 2023. Nigerian breweries, international breweries, these two companies have now joined the trillion naira market cap club. On one hand, we're seeing positive market actions. On the other hand, we are seeing some of our last year's stock market performers surrender to the brutish hands of the market. OANDO is down 40.3%, Suno Assurance is down 53.5%, Unicel down 44%. However, we've also seen some exceptional performance this year. Abbey Mortgage Bank up 225%, VFD Group up 116%, Livestock Feeds up 142%. Unlike in 2024, the market has not seen a lot of rumbling action. Last year we saw the banking recapitalization news come up, cause a downward trend for banking stocks. And we also saw the federal government come up with the windfall tax. It also had its own effect on banking stocks. We saw the market move in the direction of the monetary policy rate. We saw direction move in the direction of yield rates on a lot of our T-bills. It was projected that 2025 we're going to see a materialization of a lot of corporate action, but we are not yet there. This is probably the slowest we've seen the NGX be in April since 2018. The globe has seen quite a bit of action with the emergence of Donald Trump as President of America, from an ongoing trade war right now between the US and China that has seen trade between US and China drop down to what I would describe as phenomenally low levels. So we've also seen this action has caused trillions of dollars to be wiped off from the global equities market. However, in all the rumblings and shakings, Nigerian market seems to be isolated, or we'll say insulated from some of these global realities. Will this continue? No. Let's now move to inflation data. Inflation data for March shows that we are not yet out of the inflationary phase yet. After the CPI rebasing, we saw inflation drop down to 23%, but now in March, we've seen it go up to 24.3%. And essentially, that means one thing: Nigeria is not cutting rates anytime soon. So we will see fixed income markets still holding the savor that they hold for a bit, for a while. Lending rates are still going to be high. It means that T-bill yields, money market instruments are still going to have those high rates. How is this going to play out on our equities market? On the show this morning, we have Muktar Mohammed, the founder of Finance with Muktar. He is an international finance and economic analyst. Good morning, Muktar.
Thank you for having me. Good morning.
Yeah, so this morning we are going to be talking about the NGX in 2025. So far, so good. Basically, let's just start with, what do you make of the NGX this year? Is this how you saw it playing out? At least most of our analysts did. At least most of the stockbroking analysts did not see it playing out this way.
Well, it depends on which factor you're looking at. If you're talking about recent history, then you should know that the stock market cannot repeat history all the time, and so sometimes there's a little shift in terms of history. Ordinarily at this period, what you see is activities, especially when those first quarter result comes in. But unfortunately, like you said in your report, we've not seen those first quarter results. Those first quarter results, especially from the financial sector, especially for the big time players of the financial sector, we're talking about the tier one banks, normally determine the direction of the market in the half year and then going into the full year. So we've not seen that, and that is attributed to the results, approval of result that was not didn't get through like what we normally see from the CBN. So now what we're saying is that a lot of investors at this moment would have collected their dividend, and those dividends will be reinvested in some of
into the
this
market.
equity after their first quarter results are out. But as it stands now, those dividends, some of those payments will be coming in this week, and so definitely we begin to see activities for those that want to reinvest some of this their dividend. And once the first quarter result now comes in, it tends to add to activities, and investors begin to take position towards the half year and sometimes towards the year end.
Okay. So basically, do you see any structural or macroeconomic factors at play? Or it's just based on the fact that dividends have not yet come in and the market is just slow because probably we have a liquidity challenge. What is there any macroeconomic factor you see at play right now?
Yes, there is. There will always be macroeconomic factors for every investor that wants to invest in the market. You have to look at what are they doing in the fixed income space. What is the rate in the fixed income space at the moment? Do you want to risk that to go to an uncertain space, especially when this result hasn't come in yet? So that's what you continue to see in the market. Definitely, those are the macroeconomic policy people that you rightly pointed out. We are not expecting the CBN to meet till sometime in May and to see whether this inflation will come down. But from where we are sitting, from what you've seen in the report, we are not looking towards to see those low inflation figures. So investors will factor this into it before making investment decision. Definitely, that is one. Then liquidity also, like I said, a lot of liquidity that are coming in will come in during this week and next week. So some of those liquidity are going to find their way back into the market, and some of them also will still find their way into the fixed income market. So that's how microeconomic issues and liquidity will play the market going forward.
Okay, so now we have this trend that I've observed in the market since I started following the market from 2022. In 2023, we had champs do I think over 1,000% in 2023. Last year we saw Suno Assurances do 800% growth. We've seen OANDO do 540%. We've seen I think there's this pharmaceutical company based in Julie PLC do over 1,000% last year. So basically, what we're seeing now is that some of those bullish stocks of last year are now doing like a massive dive down. This year, if you put money in OANDO, your equity is down 40%. Suno Assurance is down 53.5%. Unicel down 44%. Meanwhile, while that is going on, we are seeing another bullish surge with Abbey Mortgage Bank. Abbey is up 225%. I saw it last week do for fear. It did 47% just last week. The same thing with VFD. VFD did 2 weeks ago, did for 53%, did 9% again last week. It's almost like it's now customary for us to have some of this bullish, what I'll call bullish bust every year. Is it normal, or it's just a facade that probably is based on how investors are feeling right now? Is it a normal thing for us to have all these bullish busts? It's almost like a pump and dump thing.
Of all the stock you just mentioned, you see that BDX itself was the only one that did a little bit better in terms of dividend payout and a bonus of 1 for 5 for investors. Yes. And you see, and you can see that investors, I think that stock is going to be marked down today, and so you see that price come down to as low as 15 naira something cover. It's 15 naira 65 cover. So definitely, when you look at that, you will not think that stock has really gone down, but they are not factoring up the dividend payment and the bonus that have dragged it down. And also, they are looking forward to maybe they will have to come for a public offer also. So that is the only stock that seems to tick when you look at those numbers that you've just brought in. If you look at some of the stocks you just mentioned, they are largely volatile, because if you look at the fundamentals in terms of dividend payout, you realize that those stocks are not highly there in terms of fundamentals. And you look at who are the people that are trading those stocks, they're normally traders. If you look at all the stock you mentioned, exception from OANDO, and I'll give you the reason why OANDO is always like that. Exception from OANDO, all the other stock you mentioned were penny stock. They were available for traders, and a lot of traders took advantage of that. For OANDO, I think the problem to OANDO has always been corporate governance. When you look at the OANDO corporate governance that have been poor over the years in terms of acquisition, the result will be good this quarter, next quarter it nosedive. So investors are not really so confident in that stock called OANDO. So you continue to see those challenges in OANDO. For ABBEY, I think investors might be looking at new the new trend in terms of mortgage banking, housing, especially when you look at the housing policy of the federal government. Um, Investors might be keen in there before you start getting those results to be able to participate, to partake in some of the expectation of the market in terms of government policy in housing going forward. I think that's what investors are looking. But again, you have to be with cautious if you really are investors that want to invest in that sector.
Okay, okay. Like you said about so just to backtrack, just to sidestep, you said something about Abbey and how investors may be looking at some of the housing policies of the government. Are there other listed micro mortgage banks? I think there's Infinity Trust. Infinity Trust is also a listed mortgage bank. Then we also have some rights like real estate investment trust. We have Union Homes and we have SFS. Don't you think that there should be like a drive towards some of those housing stocks, essentially real estate stocks, essentially? Why is it not moving in that direction? Why are investors not moving in that direction?
One answer to that question: they are not very liquid. That's the challenge. They are not liquid stocks in terms of the holdings of those shares. So those stocks are not liquid, and that has been a challenge. And what you are seeing in some of these stocks is that once they are not liquid, investors tend to go in there, and at the time of selling, you seem to be trapped in there. So definitely liquidity is a challenge. Most of the investors that normally take position in these stocks and are able to gain maximum returns are those that normally sell when the stocks are highly on bid. After that bid process, it's always very difficult because of the liquidity natures of some of the stocks that you have just listed, especially stocks in the real estate sector. And that sector also have not gotten so much patronage or so much information for investors, because ordinarily it should be a stock that most investors should be looking at. But they are not major big players. Outside of UACN, there is a big player in the real estate sector that you can see they are visible present in terms of housing in Lagos State, especially, and in Abuja. All others of these real estate companies that you have just mentioned seems to be struggling to get back to their feet.
Okay. So 2025 was projected to be a year materialization of corporate actions. We saw a number of corporate actions, but activities remain muted. What's the delay? Are companies not, do you think is that companies are probably just trying to wait maybe for some policy actions to take place, or there's like we have a broader liquidity challenge in the entire market?
I think it's not about a broader liquidity challenge. I think it's more or less investors and company waiting to know the direction. We have a little bit of challenges now in the market in terms of FX exchange rate. It was not yet stable the way we thought it should be. So definitely all these are going to play a major role in the market going forward. So definitely I expect that what we are seeing in the market presently has to deal with a lot of not just liquidity challenge. Again, like I said, the market always need a trigger, which you have pointed out. And we are not seeing those numbers, especially first quarter results. We've not seen those first quarter results to trigger a lot of activities in the market. Until those results comes in, those results give direction. And when you hear information around whereby information already filtered in that banks may not be able to make the kind of profit we saw last year due to revaluation in FX. And so a lot of investors want to see what happened in the first quarter, begin to look at what would definitely drive the market in the coming days and months.
Okay, so finally, trade wars, Trump trade wars, tariffs have become probably the most Google searched word on the internet this year. Global equity sell-offs, trillions of dollars wiped off from the S&P 500. The S&P 500 index so Nigerian market seems oddly insulated. It just seems like nothing really affects us when it comes to, is this isolation, is it a sustainable thing, or we are just seeing delayed effect, or we are just seeing a delay in the ripple effect? Is it, or some another part is, do we think that our isolation from the global market is a positive thing, or is something not to be very happy about?
I don't agree that we are isolated. I remember some 2 weeks ago when the global market took a tumble about bond policy. There we also took a tumble, which is what we call the snowball effect, the fear of the Trump policy. But when you look at it critically, we're able to recover because, again, investors begin to factor in how much exposed are we to this trade war. Okay. And if you look at it, we are not so much exposed to this trade war, but we have an exposure. And those exposure to this trade war is mostly in the oil and gas sector. And how have we been exposed? There is the low price of crude oil, which also have its effect, whether its effect is on our foreign reserve, which we will see a low foreign reserve because, again, we are not even able to meet production. Oil benchmark has come down low. Oil is selling just at $60 per barrel. So, and that is less than our budget projected budget benchmark. But to the local economy, you see the positivity in there, that you see low crude price. And so if a company, some of these oil and gas companies that were listed before they did, a company like MRS now is supposed to be the toast of investors because, again, it's the marketing aspect that is listed. But when you look at those companies that are listed holistically there, a company like Seplat, a company like OANDO, then you are beginning to see that there should be low pessimism in those stocks, and those stocks are supposed to be coming down, and that is what you definitely will be seeing in the community. Those are the effect that we have. So most of these effects are going to come in the oil and gas sector, and those are the companies that are fully wholly listed. But again, you see positivity in the marketing aspect of some of these companies, especially when you look at Total Nigerian PLC. So we expect this deregulation policy of local low price to also have an effect on their bottom line.
Okay, so thank you so much, Muktar Mohammed, for your time on BusinessDay TV. We really appreciate the insights you provided for us. Thank you so much.
Thank you for having me. Thank you.
Yeah. On Friday, we're going to be turning our attention to IMF spring meetings. Yesterday, IMF projections came out, and it's filled in the global economy. There's a lot of uncertainty about what 2025 holds. Every country in the world has been downgraded when it comes to their projections for inflation, GDP growth rate. In Nigeria, IMF has put a projected inflation at 26.5, just about 200 basis points above Nigeria's present inflation rate. Are they projecting that Nigeria's inflation is going to go up even further the coming months? We will see. We'll talk about all of that on Friday. Good morning. Thank you for joining us on BusinessDay TV's Economy and Market. It's been great having you here. See you on Friday.